Mr. Kumar, Mr. Gupta, and Mr. Gandhi already on stage. One more chair on the stage. Co-founder and CEO Lendbox and PerAnnum, Mr. Ekmmeet Singh. Let's give him a warm round of applause. So entering the new phase of growth for P2P lending, a very interesting topic right there. And we've got Achal, who's going to be curating it. Over to you.
Good afternoon, everyone. It's my pleasure to host a distinguished panel of thought leaders representing this nascent yet very vibrant subset of Indian lending ecosystem, which is the peer-to-peer lending. Guys, this panel is very close to my heart because this is the first time peer-to-peer lending has been discussed in one of the major fintechs like this in the country, which indicates growing prominence, popularity, as well as adoption of peer-to-peer lending in India, right? Though this is just a small fraction of assets in terms of as compared to banking and financial services in the country, but this fledgling baby promises to transform the lending ecosystem in India by democratizing returns as well as giving seamless services to the borrowers. Though P2P is still at its infancy, right? But thanks to a supportive yet robust regulatory framework by the regulator, the P2P sector surely seems to have found a niche by offering seamless services to both borrowers and lenders. Post-regulation, I think we have got around 25 P2P players in the country, representing almost $1 billion in terms of AUM in the country. But this is yet a percent of probably the other P2P markets like US and all, where the asset size would be probably more than 100 billion. And hence, this is where the potential lies for the P2P services in the country. In last 5 to 6 years, the P2P sector has grown primarily on the backbone of technology as well as its collaborative partnerships with tech and non-tech companies. In last 1 to 2 years, we have seen exponential growth of P2P sector. But there is where we should also, as P2P players, check our processes, systems, technologies, compliances, etc., both from regulatory perspective as well as business prudence perspective. Given the above and the background, the biggest question in front of the panel today is challenges and growth in peer-to-peer lending. To discuss, debate, and exchange views on this subject, we have an august panel coming from both the market side as well as bringing a regulator's perspective. With this, I would like to first hand over the mic to Chandan Kumar sir, who has been instrumental in devising policies on peer-to-peer lending as well as digital lending guidelines. Sir, thanks a lot for making it to the panel. My first question to you, sir, is what is regulator's vision with respect to peer-to-peer lending in the country? And why do you think there was a need to carve out P2P specifically in the ecosystem?
Yeah. Good morning. Good afternoon, in fact. Thank you, Achal. And good to have you all here. So on P2P, I'll respond to Achal's question. I'll also try to give the regulatory perspective of the P2P regulation. So first, the existential question, why the P2P? The P2P, why the answer can be answered from the industry's perspective, right? That you'll always find an answer. From the real economy, from the general masses, why do we need a P2P? The question which we are discussing. So the P2P first, the way we wanted to have it is, there are retail individuals and small businesses, small credit needs are there on a temporary basis. That needs to be met. Secondly, there are temporary cash mismatches of small businesses, SME sectors and all. Who are going to provide that? There are new to credit customers. Now we want to build a credit history for them outside the formal banking system. Now that is what the P2P is trying to do. And lastly, a credit culture. See, in an economy, if you want to give a push to a real economy, we need to build a credit culture. So these 3-4 points which we are saying, that is something which answers the existential question why we want to have the P2P, right? So with this in background, we came out with a discussion paper, I think in April 2016, and then in November 2017, we came out with the P2P guidelines. Now, when we came out with the P2P guidelines, there were already incipient traces of the P2P industry functional, right? There was already a big crisis in one of the largest Asian economies, where the street protest and all, and where the P2P platforms have gone bust, right? So in that background, we framed the P2P guidelines, which you see now. So now, what are we trying to do in a P2P? What we call the overarching principles of the P2P regulation. What are those? So if we go a little deeper into that, first, there are a business, the commercial requirements of the platforms, right? The innovation and the regulatory responsibilities. So the regulation is trying to come and strike a balance between all these, right? And that is why the job of the regulator becomes difficult. So when we are doing that, there are certain basic tenets of regulation which may be written in as part of the regulation, but where we are emphasizing, right? So what are those, the basic tenets of regulation? So the basic tenets of regulation, first, the platform has to remain balance sheet neutral. What does it mean? So all the credit intermediation process which is happening, the platform's balance sheet will be neutral to it, right? So we have seen, in fact, this is in public domain, what happened in China, where there was a commingling of funds of the balance sheet with the investors' fund, and we saw how the platforms went bust, right? So that is one which all the industry participants, or even those who are planning some ventures into P2P, need to take care. The P2P's own balance sheet needs to be completely intact, kept separate with whatever the credit intermediation process is happening in the ecosystem, first. Second, we have a escrow mechanism. Now, what is the escrow mechanism? The escrow mechanism ensures that the lender's fund, the borrower's fund, is completely at arm's length distance from the platform. So the fund movement which is happening with the investors, borrowers, that the platform doesn't have access to that. So when we say this, the spirit of the regulation becomes more important than just mere words, right? So that is second. Third, we have said a tri-party credit agreement. Now, tri-party credit agreement, what is it? The platform at the center. On the one hand side, there are these lenders and the borrowers. When we do this, what does it ensure? One is the legal certainty of any credit agreement. But more important than that is it ensures transparency to all the stakeholders. So this credit agreement needs to be like the platforms, the existing ones, they need to take care of this, that how the credit agreement you are reaching at that agreement, right? So now, based on these are like the basic tenets on which we have built up the regulation. Then what we did, that if you are trying to strike the balance between the interest of the platforms, the commercial interest, the interest of the innovation, because we are moving generally towards a disintermediation process. Now, you would have learned about the DeFi, the digital decentralized finance. So now, if you see the P2P, it outside the formal credit system. The lenders are not someone who are registered with Reserve Bank like the banks and NBFCs. They are also people like us, the retail individuals, or anyone who can come and lend on this platform, right? Borrowers are also the peers, the retail individuals. So when we need to have this, then we need to be extra careful on this. So the platform which has emerged, this needs to be carefully, seen, is a minimalist regulation. This regulation which RBI has come out with, a minimalist regulation, on the regulatory premise that the P2P operations will have low scale and the participants on this platform are generally retail individuals or small businesses. So now on this premise, the regulation has emerged as a minimalist regulation. Now entire regulation is interwoven with this premise. Right. I'll stop here and then I'll come back.
Thanks a lot, sir. Looks like I've just gotten a crash course on my P2P regulations again. Moving on to Rajat. Rajat, so there's an informal joke in fintech industry, right? That when you get a license, RBI thinks that it's time for you to graduate from boys to men, right? So you have been at the forefront in kind of getting this industry regulated, right? So I just want to understand from you, what was the industry like pre-regulation and how has the industry transformed post-regulation? Has it kind of helped grow the industry or has it curtailed the innovation? Over to you, Rajat.
Thanks. Good afternoon, everybody. Thank you for this great audience, great participation. So I'll just step back. Like we were the first ones to start this peer-to-peer in India. And I didn't know the word P2P also because that was an idea which came up and I started Googling and saw that, okay, some incidences of these kind of products are being created in US and UK. This was back in 2010. And at the heart of this model, which I think Chandan sir also touched on it, why thankfully we agree, it's first time the regulator and the regulated entity agree on this. I'll just tell you why we started this company or this business. And it was quite weird for somebody to be saying that this man can lend money to the other person. And when I shared it with my friends, at the heart of it was that we wanted to create a new supply of credit, which is cheaper and faster. And I come from a school of thought where if you want to do a demand side disruption, you need to go to the supply. And when we investigated, so I'm not from the finance background, now I can't say that. I came from an outside perspective and said that, okay, here is a borrower, how can we give him credit which is cheaper and faster? So we went to the supply side and we realized this supply of capital is controlled by 247 banks in the country. I think that's the number at that time, okay. And so, jisko kehte hain Gangotri wahan se start hoti hai. So the money flows from there, it goes to the NBFCs, and then there's a whole ecosystem out there. And we felt that if somebody is getting a loan from, say, HDFC or somewhere at 20%, all things being equal, I should be able to offer him at 15%. And we wanted to create an alternative supply of capital so that there's credit enablement happening. And all this run through technology. Okay, so we want to be technology first because that's what our background was. With these starry eyes, we started this company, okay, and we continue to solve that. Now, the good question about regulation and all. We started the product in a way where we even had auction model. We had an auction model, then they had a reverse auction model. All those products failed, okay. We gone through that journey of, because we were so excited, we felt that the borrower is so empowered that he can actually participate in an auction of interest rates and everything. Thereafter, the things happened in China, as sir talked about, and then we realized there's different models which have to be created. And the other thing, our thesis was, this business will flourish in a crisis, a financial crisis kind of thing, deemed or to be that. And unfortunately, I'll use the word unfortunately, during COVID, it came true. Okay. Because our thesis was the alternative supply of capital, since it is controlled by the major banks, that flows, that gets stopped or opened up. And actually at that time, the credit lines were opened up by the government, not the banks themselves, if you see it. But the alternative supply where we were lending, we were still lending money. And the industry has actually grown during COVID and after COVID. It's so coincided. So this is one big win in my mind of the thesis of which we started the business. Of course, we continue to service small businesses. Our 80% of our lending on the platform is to small businesses. And these are actually very good borrowers who are not touched by the formal credit system. And I think at some level, we are able to solve that problem. And I think $1 billion of loans which are less than 10 lakh rupees only unsecured, I think the industry is really scaled up for itself. Yeah, that's my understanding till now of the whole thing.
Thank you, Rajat. And the beauty I feel is that P2P has been able to thrive on a relatively collaborative model, right? We see multiple partnerships being thrived upon in peer-to-peer lending. So, Ekmmeet, your company Lendbox has also forged multiple partnerships with multiple fintech players, non-fintech players, etc. I just want to ask you, what's the role of being a collaborative sector in the overall growth of the Indian lending ecosystem?
Thank you, Achal, for the question, and warm welcome to all of you here. Fintechs and P2P lending companies play a pivotal role in terms of reshaping how Indian consumers access capital and financial services. The synergy between the two will definitely will have a very positive impact on the overall on improving the entire financial ecosystem in India. Now, to understand the economic impact of such collaborations on the industry and the ecosystem, I would like to break this down into various kind of partnerships that get built upon. Like Rajat mentioned, I mean, there is demand side and there is supply side, and both sides can have its share of partnerships. If you focus on demand side, which is where the borrowing happens, I feel one of the most intuitive understanding of P2P lending sector is that it provides access to underserved borrowers. And fintechs thrive on data. This combined with the ability and capability of P2P lending platforms to build alternate data models, risk assessment models, will ultimately lead to giving access to lend to borrowers which do not fit into the fixed template of what the traditional institutions look like. And which is where I feel getting more access to alternate credit will help in impacting the economy in a positive way. Second, I feel a lot of innovative models get built up in the entire ecosystem. Fintechs in general are agile and innovative in nature, and as compared to traditional institutions, they identify and look at problems differently and are able to create solutions which are tailor-made and are not one size fits all kind of approach. This is where the access of capital which comes from P2P lending platforms, which is more flexible, which is more transparent, which is more faster, more efficient, comes in handy. That a lot of niches within sectors can be created. These niches can be around the spectrum, ranging from school fees loans to medical sector to consumer lending. And traditional institutions still don't want to participate in something like this, which we feel P2P lending has been able to bridge that gap. Now, if you look at the other side of the spectrum, which is on the investment side of business, one of the key characteristics on which P2P lending platforms thrive is the concept of fractionalization. Fractionalization as a concept basically means you pick up an asset, you break that down into smaller fractions, and then distribute it to mass audience. Now, and in certain situations on platform like ours, this can go as low as 500 rupees as well. Now, what happens is this gives a lot of access to retail investors to products which were only restricted to institutional investors high net worth individuals. And and this combined with the capability, with the distribution capabilities of fintechs like Unicards and many others, and given their digital prowess and the capabilities, I feel this can help in distribution of such investment products to the retail investors at scale. And this will in turn lead to value creation. This will in turn lead to capital formation, all the characteristics which imply that it has a very strong impact on the economy. And just to conclude, I would say these partnerships, and not to name particular companies and domains here, but have been able to not just take P2P lending services to masses, but also created a lot of impact on the economy of India. Thank you.
Thank you, Ekmmeet. Two words that really made me think loud and clear is alternate data with alternate source of capital backed by technology is truly disruptive. I am sure regulator is keeping a close eye on these partnerships, right? Talking about partnerships, Nitin and I met when LiquiLoans partnered with Uni, right? So, Nitin, over to you, right? So, you were the founder of PayU, then went on to become the CEO of Ola Financial Services, then founded Unicards. What made you get into peer-to-peer lending, right? You look after big markets. It's just $1 billion AUM right now.
$1 billion, but growing. Thank you, Achal, for the question. So I have the luxury of being second mover. Sir wrote the guidelines in 2016-17. Achal, Ekmmeet, Rajat, right? All early start. They have had the license for 5+ years. I got my license in January 23, right? So when I look at this industry, I see three things which excites me. And I'm a venture-backed company. So I am chasing scale, and I'm chasing something which is asset light, right? It just feels like that. So number one reason is, as sir said, this is balance sheet neutral. It's asset light. The lender is giving money to the borrower. I'm playing the role of a platform. And any venture-backed company loves being a platform, connecting lenders at scale with borrowers at scale, providing technology and algorithms in between. Right? So that's the number one reason. It's asset light, it's balance sheet neutral. If you have to build a large NBFC out there, you have to raise equity continuously forever. But in this business, a large business can be built by just solving the problems of lender very well and just solving the problems of borrower very well and just being a platform. Number one reason. Number two reason, small borrowers in P2P, the maximum that a borrower can borrow is 10 lakhs. That means you're going after small borrowers, retail borrowers, small SMEs, right? That business granularly can be built into a very, very large balance sheet. You look at non-banks, large non-banks in India, right? Just by focusing on this small customer, you can build very large balance sheet. So scale exists on the borrower side. The number three reason is that whenever you are building a platform, you have to take care of both sides of the platform. On the borrower side, borrower needs money in a clean, efficient, fair, right priced way, which is possible. But the lender also wants predictability. See, lender is coming there with the intent of making a return. And they want more predictability. When they lend one-on-one, and if that one borrower goes kaput, right, they lose their entire money. But because of my predecessors, right, 2-3 things emerged. One is rationalization. A lender is coming to putting 1 lakh rupees on the platform. That 1 lakh rupees is broken into 100 chunks of 1,000 rupees each and given to 1,000 borrowers. Now, even if one borrower goes kaput, right, that's 1% of capital loss. Small section will go bad. Second, the expectations of the lender or the investor on this platform was tempered down. They started with 14-15% return, but right now they're operating at 9-10-11% return. And that's the kind of expectation they have. When they have lower expectation, your cost of lending, your borrower quality also slightly improves. You are lending at a better rate to the borrower, to a better borrower. And therefore, the probability that the lender will end up making money meaningfully increases. Because of this, right, you see a platform, you see borrowing scale happening at the borrowing side, you see more lenders making money rather than losing money, and it's a great business to get into. That's what led me to P2P. And I think $1 billion is a start. This industry hopefully will grow 10x in the next 5, 7, 8 years.
Thanks, Nitin. It's interesting how you said that asset light model is what got you into this business. Now that you are licensed, hopefully asset light does not become compliance heavy. Now, talking about regulations, right? On borrower side, you have come up with multiple regulations in the interest of borrowers, in the interest of transparency of borrowers, right? Like key fact statement, borrower agreement should be clear and transparent. Sir, peer-to-peer lending industry has to create its own template to a great extent, right? Because unlike banks and NBFCs, which have been functioning for decades, if not centuries, P2P is kind of making templates of its own, KFSs of its own, which has to cover tripartite, so to say. For lender side particularly, sir, what are the steps which P2P industry should take to increase transparency, to increase lender communication transparencies, etc.? What's your view on the lender side communication, sir?
Yeah, Achal. So, we are in the midst of a digital financial revolution, I would say. So when this is happening, if you see both the demand and the supply side factors are working in tandem. On the demand side, you have the vast population, rural as well as urban, which is exposed to digital platforms on which you function, right? On the supply side, you have the digital public infrastructure. I mean, what more you want? Both the demand and the supply side factors are working in tandem. You have the market. So now we came out with the regulations in 2017 November. Now that when we are going to complete maybe around 6 years, maybe this event is the right time to deliberate and discuss what kind of opportunities lie ahead and what kind of regulation you are looking going ahead. So now once you deliberate that, the first thing which you need to keep in mind, all of us, is that what we are looking at is the supreme interest of the lenders. Lenders are a kind of depositors on the platform. The interest of the borrowers and the platform as digital enabler of a credit intermediation process. This is the ecosystem. Now, if you are going to look at newer and diverse opportunities due to this digital financial revolution which we are undergoing, then I think the existing platforms and the market participants, they need to deliberate on 3, 4 leading questions, right? What are those leading questions? First, are the platforms maintaining the quality of borrowers and lenders, which will ensure transparency also. The quality of borrowers along with transparency to all the stakeholders. First, are there any hidden leverages being built up on the platform? Hidden leverages, mark the words, becomes very important in view of the asset light model. It's contrary. So, but we need to be cognizant of this fact, whether there are hidden leverages being built. Third, whether the borrower's stress is being masked by the platforms, right? We have the NPA norms and all, but whether in any form, many a times it may not be intentional but unintentional, right? So the golden rule is to go back and think of the spirit of the regulation. So whether any kind of borrower stress is getting masked. And last, in your zeal to grab newer and diverse opportunities, whether the scaling up of operations through the network effect, right, which you are doing, whether that scaling up through the network effect is on the right side of regulation, not to the left side of regulation, right? So these are the 3, 4 leading questions which the existing platforms need to ponder and then deliberate and then think of whether we are ready, the platforms are ready to get the kind of regulatory trust so that the regulator can bestow what we call higher responsibilities. So are you ready to shoulder those higher responsibilities? Yeah.
Great, sir. Thanks a lot for these insights. I've been just told that it's a time to wrap up the session. So I'll just conclude by saying that, yes, P2P sector has its shares of hits and misses, right? It's taken time for the sector to grow. It's only in last 1 or 2 years that the sector has been able to grow into something meaningful. Based on this panel discussion, I think the feedback for all the players and the audience to take away is that we should continuously invest in technology, compliances, processes, and SOPs. And as long as we are investing in that, we should be through. Thanks a lot, everyone. Do we take 1 or 2 questions?
Maybe we can take one.
Sure.
Let's, yeah. So we've already given an opportunity. Let me see if I can give one more person. All right, at the back. You might have to come a little forward for the mic. Yeah, come forward. So sorry if I have to trouble you with a little. It'll help you in the step count today. Hi, what's your name? And if you can just keep a brief question.
Hi, good afternoon. I come from a very traditional background of bonds investing as well as on the equity class. This is a new alternate asset class as an investor. So I'm looking or exploring it more from an investor perspective. And I just have it's a very naive question. One is, what is the recourse as an investor that you have? I understand there are hedging strategies that you have to diversify in terms of the lending way. And the second is, what is the current gross or the net loss that we currently an investor has? Just very basic from that perspective. Thank you.
Achal?
Sure, I'll take that question. So, sorry, what's your name? Sai. So, P2P lending is a platform which is being provided to the investors, and by nature, there is technically no recourse available, right? The only assets the lender has is the underlying borrowers, right? Now, the different platforms will have different NPS. Like you said, most of the platforms resort to the strategy of diversifying the lender's money across different borrowers. But from what I have understood in last 4 to 5 years, the platform NPAs vary between 2% to 5% or 7%, right? And the underlying IRRs range from 14% to 20%. So the net returns on an average which a lender can technically make is anywhere between 8 to 12%. But again, that's overgeneralization. There might be variations in interest for different lenders, if anyone wants to add on to that.
Mr. Gandhi?
Yeah. So, look, technically speaking, the recourse is not there, but the guidelines say that the platforms can offer certain collection and recovery practices on a chargeable basis. So, different platforms have a process. We report back to the bureau. So, it's not a free-for-all kind of a platform that anybody can take money and run away. So there's a so-called, I won't use the word underwriting, credit appraisal system which platforms do. They onboard, so typically like our platform would onboard 1% of all the applications. Okay, so there's a lot of exclusion which takes place. So the platforms will do both things, run a rule engine, do a pricing engine, give you indicative pricing, on which, and there's a credit appraisal of the borrower. Then there's a whole collection mechanism which takes place and a recovery process which is done, including reporting to the bureau and doing legal recourse on the behalf of the lender. So it's not something which you're feeling that, okay, 50 people came and it's up to them to pay back or not. So it's not that laissez-faire. Yes, there's a recourses, safeguards built into the platform for investor protection, but the loss is yours. So there's a likelihood of principal loss. Forget about the returns. You could lose capital. Okay. And that you have to be prepared for.
Sure.
I'll take 10
please,
seconds.
Please.
That is the commercial perspective, but I'll tell you, this NBFC P2P is a regulated entity. It's registered with Reserve Bank. So the entire bouquet of complaint redressal system for the deficiency of services, including the integrated ombudsman and all, is available, right? So it is available to you. Whereas the losses and all, you are taking a risk on the counterparty, right? That is inherent to any business model. But what you expect of any other regulated for an NBFC or a bank, all those redressal services, complaint redressal is available to NBFC P2P also.
Sure. Thank you so much, ladies and gentlemen. On that note, let's give them a big, big round of applause.